And here's Hilton Tarrant with the business headlines.
Well, Lonman will close mines and cut costs to survive a market downturn. Trevor Manuel issues a warning saying now is not the time to change economic policy. Coronation, the owner of 25% of ABI, agrees to back a bid from Tiger Brands, and township properties still booming, says FNB. The all share closed down 0.7% at 18,747. Gold currently at $737 a fine ounce. A barrel of Brent at $49. Rand is at 10.26 to the dollar, 15.37 to the pound, and the euro at 12.96.
Assassin's David Shapiro is with us as well as always. David, the market's down for the day, but a lot better than we started.
We picked up in the last hour, the last half hour. We seemed to recover quite sharply because I think we were down over 2.5% at one stage. And a bit of recovery coming through banks and also some industrials. Some of the heavyweight industrials were stronger in the closing stages, but ABSA seemed to be do quite well. I think Investec, Old Mutual also picked up. So overall, not a bad day. I think, Geoff, we have to bounce off these levels. I think these are critical levels from a technical point of view. I think in the United States as well, I would hate to see us go below the previous low, which we registered in October. So it's important that we stage a recovery. But if you look at the news, it's hard to find what's going to bring the bulls back in.
Well, at least we heard Trevor Manuel saying that we're going to grow at 3.7% or there and thereabouts.
Yeah. I don't
no comment.
I don't know what to respond to that because I think that's for the year maybe taking a very strong first half or earlier in the year when we saw massive gains in commodity prices, where the JSE reached that all-time high of 33,000 in May. But I think now I can't see that happening. I think we're going to see a massive slowdown on the mining side. We're still going to see consumers under pressure. So Christmas will tell. The Christmas period will tell. But we may grow, but I don't think anywhere near that level.
We're going to be chatting to Andre Lamprecht a little bit later. What did you make of their results? I thought they were relatively good in this sort of environment.
They are. It's a neat operation. It's doing very well. But again, we come back to the situation. Again, this is a September year in, so it was for the full year. Housing market was still doing very well in the early parts of the year. Most of our industry was doing well, but we have to now monitor from a day-to-day basis going forward. What's going to happen to the housing markets, what's going to happen to industry and trade, and those markets. So it's very difficult to try and plot where earnings will be 3, 4, 5 months from now. And I think that's what's holding the markets back. That's why we're getting such low, PE ratios or high earnings yield and high dividend yields. So it's not easy to forecast. It's not easy to look ahead.
Just quickly, the US up at the moment, they seem to be liking what Bernanke and Paulson are saying.
They did. Bernanke's coming out with a statement that the banking markets are stabilizing. He's seeing signs, better signs of confidence. He still says it's far from normal. The spreads are too wide. But overall, he's putting on a slightly more confident message there, which the markets seem to like. There was good results, tech results. Also, the PPI, or their producer price, inflation came down 2.8%, which is a massive drop from the month before. So it might have encouraged some bulls, but I hope the bulls keep going. And we need a good day on Wall Street today.